So you can see here, Karen Braun, she put out a report just talking about soybeans conditions improving, or it came in just below the trade expectations, at 84, versus trade was thinking at 86. But what I want to point out is both the spring wheat and the winter wheat came in a little bit better than expected. So trade on winter wheat was at 50, came in at 52, and from last week's first look at what the good to excellent looked like for the spring wheat, it was at 45. Now it's at 50%. So that's pretty significant if we're talking about wheats and its improvement there. So you can see here that the soybean good to excellent condition, just below the 5-year average. What I want to start maybe just pointing out is where the moisture is going to fall. Now, forecasts are absolute garbage if they're beyond 3 days, but we're always talking about how the trade is treating some of the stuff ahead of this as well. So you can see that there's potential flooding in this area, and of course smoke in this area. There's still some frost in the mountains over there. So you can see this weather just kind of flashing across here, adding a little bit more moisture in that Midwest. On this map, you can see that there's a bit of a void area. It doesn't show up on all weather models, but here's the anomaly for the next from June 11th to June 17th, just suggesting that there is going to be less moisture there, and that's going to be closer to a key growing timeline for your corn and soybeans. Now, if that continues to develop, there's going to be some weather stories in this market, and corn and soybeans will probably have to react. Here's your long-range forecast for the western prairies, and you can see that there's a little bit higher moisture in there, but Manitoba gets kind of left void, and I'm going to say some of these areas. But what's nice, I would say, is maybe some of that rainfall that might be hitting, and I think it's only 2 weeks out, so hopefully it stays in the forecast. Just want to point out your percentiles of where the moisture has fallen for this basically last 30 days. You can see bullseye right there, and then it seems to scale out. There's some areas that have hit almost at 95 percentiles, but Alberta looks, except for the Peace, but it looks pretty good for moisture. And then you've got the whole rainbow of colors in Saskatchewan and Manitoba. So there was a memorandum or information came out from the White House yesterday, and they're basically saying Wednesday's a deadline for them to put their best offers. So things are going to be a little shaky on shaky ground for the next couple of days based on trade, as some of these things might come or might not come. Just a report on Ukraine weather pinching some of this yield. And again, there's some extremes in analysts, and the analyst that's pointed out here is the extreme, as much as 10%. Others are saying 5. I don't want to pick a number, but I'm not over there. Dollar, U.S. dollar is actually going lower and continue to pressure lower, and that's helping crude oil and the wheat complexes. Well, let's just quick look at the market here. So you got canola up, you've got rapeseed down, soybean oil basically flat after its big move. Crude oil is still up again. Soybeans are recovered a little wee bit to 3 3/4 cents. Spring wheats are down. All wheats are down, so 7 to 6 cents down. Corn unchanged basically, and the Canadian dollar is slightly down. So just have a look at it. That's a big move that we saw yesterday, and a little bit of recovery on the front month July. Same issue there for the new crop. And when you look at what Kyle has written here, I would say that so if you haven't added to the sales to execute the triple play, just not to panic just yet. Recovery is possible with lower soybean oil stocks, and be sure to make sure you lean into this if we get back up there. In other words,
here when we are looking at a Fibonacci retracement here, breakdown of this rising wedge pattern, rising.
Yeah, so it's just they didn't want to continue to play, so whatever. So soybean oil futures, this is the downside that I was talking about, and soybean oil futures have actually done exactly the same thing. Crude oil looks like we're going to break out of this range if we continue higher above that 64 cents. Canadian dollar still hitting its resistance. I should move that line up there, but hitting resistance right at this value that we're currently at, and not wanting to trade any higher. On the flip side, you've got the U.S. dollar index continuing to trade lower. Let's just have a look at wheat. Um, Kyle's write up yesterday. I usually talk about locking in volume on basis if you can. Now, not all is able to lock in basis, but and if there's a break above the 695 resistance, then grab a September entry at 50% of the initial contracted volume. So if the spread doesn't change between the July and September contracts, this entry would be 623 and then 650. So this is off the Kansas, I believe. Price out half of your basis contract at today's values and look at the rally to rebuild momentum before time runs out. Not ideal, but it keeps the farm in the market without having trading account. So basis levels are improving, and that's even in Manitoba as well. And you can see that what he's talking about is just if there's going to be a pullback and then a breakout here.
Market is a wheat market that's just kind of stubbornly, it's back and forth. It's choppy. It really can't make a decision up. I mean, we've had all these headlines in the Black Sea. Really doesn't want to move the market. You had this nice pop yesterday on maybe some rise escalations in that Black Sea, but boy, it really couldn't hold those gains. Yes, we finished higher by 5 cents, but couldn't hold it. So again, we really need to hold at the end of the day 531. I mean, we got through there at 50% retracement. We found resistance at the 23 and probably a little bit of resistance, let's call it, right near that 537 mark. But at the end of the day, get it close, stay above the 20-day, maybe get some short covering back into this market. I'm watching the spring wheat market. I like some intercommodity spreads here, being long some spring wheat, short the winter wheat. Again, maybe the
So you were just talking about maybe some spread plays. If you want to do something like that, give me a call. So spring wheat here, you can see that we got to this area and then went a little bit above it, got above the 200-day moving average, and now it's pulled back a little bit. Now, if there's any more stories, it could get into these other incremental values higher, but it's just just be cautious with the thought that it's only got upside here. Wheat has proven us all looking a little bit silly these days. So here's your Kansas wheat trading, making lower highs and continuing to make lower lows up against a possible trend line here. Same thing with the Chicago wheat, and that's what Darren Fesser was talking about. So here we're going to talk about the corn a little bit.
Corn breaking down obviously over the last couple of weeks here, but we are watching this Fibonacci extension level between 434, 427. That is the 50 and 62% extension moves lower. Again, as I always preach about these Fibonacci's, whether they're extensions or retracements. Now, this is an extension. How's an extension? We take this high and this low here, and we draw the extension. So this is giving us an idea of where the potential support could be. That lines up at that 434, 427 level. Guess where we hit in the overnight trade on that July board? Right at the 50. So this is a decision point for the market, whether we bounce off these levels or move lower, or because the momentum is still bearish here from this momentum shift here back in late April, early May, do we continue lower towards that 416, 415 level? So again, decision point here, momentum and trend continue to favor the bears. Again, any type of rally probably back towards 450 now, which is this week's pivot, needs to probably be rewarded upwards of 460.
And next week we're going to have the USDA crop report here, so we can look forward to that.